Hello, welcome to my YouTube channel. Please subscribe to the channel if you think it's helpful. Today we are going to learn about the Indian Union Budget. It is a pivotal economic and fiscal document that outlines the government's financial plans and priorities for the upcoming fiscal year. It plays a crucial role in shaping India's economic trajectory, influencing policies, expenditures, revenues, and overall economic growth. Now let us look at the significance of this document along with the components and the process of making it. First of all, the Indian Union Budget serves as a comprehensive roadmap for the country's economic management. It is presented annually by the Finance Minister to Parliament, detailing the government's revenue and expenditure plans, tax proposals, policy initiatives, and sectoral allocations. The budget reflects the government's economic policies, developmental priorities, and strategies to address fiscal challenges while fostering inclusive growth. The budget consists of several key components, each essential in understanding its impact and implications. Number 1. Budget speech. The Finance Minister's budget speech is a critical part of the presentation. It highlights the economic performance of the past year, outlines macroeconomic projections, and articulates the government's policy objectives for the coming year. The speech also addresses broader economic issues, challenges, and reforms. Number 2. Annual Financial Statement (AFS). This document provides a comprehensive overview of the government's estimated receipts and expenditure for the fiscal year. It includes both revenue receipts and capital receipts. The AFS outlines how resources will be mobilized and allocated across different sectors and programs. Number 3. Finance Bill. Presented alongside the budget, the Finance Bill contains proposed amendments to various tax laws to give effect to the financial proposals announced in the budget speech. It covers direct and indirect taxes, customs and excise duties, and other fiscal measures aimed at revenue generation and economic regulation. Number 4. Expenditure Budget. This component provides detailed allocations of planned expenditures across ministries, departments, and schemes. It categorizes expenditures into revenue expenditure and capital expenditure. The expenditure budget reflects the government's priorities in areas such as health, education, defense, infrastructure development, and social welfare. Number 5. Receipts Budget. The receipts budget details the government's anticipated revenues from various sources. This includes tax revenues, for example, income tax, corporate tax, GST, customs duties, and non-tax revenues, for example, dividends, profits from public sector enterprises, and capital receipts, borrowings, disinvestments, etc. It provides transparency on how the government plans to finance its expenditures and manage fiscal deficits. The process of formulating and releasing the Indian Union Budget involves meticulous planning and consultation. Pre-budget consultations. The Ministry of Finance engages in extensive consultations with stakeholders, including industry bodies, economists, state governments, and the general public. These consultations help gather inputs, assess economic conditions, and incorporate diverse perspectives into the budget formulation process. Parliamentary approval. The Finance Minister presents the budget in Parliament, typically in February. The budget is subjected to scrutiny, debates, and discussions in both the Lok Sabha, that is the lower house, and the Rajya Sabha, the upper house. Parliament's approval is required for the budget to be enacted into law. So there are two types of budgets in India. One is the interim budget, which is released generally in the month of February, and then there is the full budget, which is released in the month of July. Generally it is released in the month of July. Now, implementation and monitoring. Once approved, the budget comes into effect at the beginning of the fiscal year on April 1st. Government ministries and departments begin executing budgeted expenditures and implementing policy measures outlined in the budget documents. Ongoing monitoring and evaluation ensure that budgetary allocations are utilized effectively and in line with intended objectives. In conclusion, the Indian Union budget is not just a financial statement, but a cornerstone of economic governance and policy formulation in India. It reflects the government's commitment to fiscal discipline, economic growth, social equity, and sustainable development. By addressing challenges, seizing opportunities, and promoting inclusive prosperity, the budget plays a pivotal role in steering India's journey towards becoming a vibrant and resilient economy. Thank you for listening. If you like the content, please subscribe to the channel and stay tuned.